Hello, I hope you guys are gaining value from the channel. I hope you guys are getting value from it. So this video is about valid order block. Before I teach, I try my best to state out rules and regulations that can help you improve your trading. Now we have two types of order block. We have the bullish order block and we have the bearish order block. Now there are rules and regulations that guide this. That way you can actually know the best order block to trade. Now, firstly, the order block must create either a BOS or a MSS. Now, what this means is a shift in structure. Some people do call it change of character. When you see this kind of sign on your charts, the order block must be unmitigated. That is number two rule. The order block must have an imbalance, number three rule, and the order block must be either in a premium or a discount zone. Now, this is just 1 day chart. If you can look at it here, this 1 day chart carries the whole rule. Can you see that? Firstly, there was a break of structure. Market took out a liquidity, the external liquidity. That's the break of structure here. External break of structure. What do we see next here? We see what? We see a fair value gap here. And what do we see here? The last bullish candle before the impulse move. This is a bearish zone. Then if I take my Fibonacci from the high to the low, from the high to the low, and what is here? This is our premium and this is our discount zone. So this signifies for a strong fair value gap. Even though you press play and you can see market is respecting that fair value gap. You can see that market respecting that fair value gap. But I don't want to use a higher time frame now. I want to go to a lower time frame to show you a valid order block. For majority of you trade for hours. Let's bring this closer to us here. Don't know if we actually need this one, but I want to bring it closer for you to see. Now, if you want to get good zones, am I correct? Yes. If you want to get good zones, you can see here that there was a break of structure here, and you can see a fair value gap on a an order block. But these are other blocks that are very valid to you for you to understand. Now let me show you one here. So I have a break of structure here. I'll take its internal break of structure because it had a retracement of three candles, one, two, three. The bodies are closing above each other, which signals what? A BOS around here. What do we have next? If we're following our rules, let me bring it down closer to you here. What do we have here? We have what? We have a fair value gap. Confluence number three. Even though the trade actually shifted structure, but if you can observe very well, the market reacted what in the order block. Now I'm looking for something that has more confluence for you to see. Okay, let's look for something around here. Okay, let me follow this direction. Let's see here. Now I can see here many of us will call this a mitigation block, but if you can see here, there is a break of structure here and an order block. I haven't tested this pair, but I'm just showing you an example. I go down to 1 hour. We are going to follow the rules and regulation to guide us in this trade. Now we said market must do a shift in structure or a break of structure. Now, not to confuse you, if you can see here, there was a shift in market structure here. If you have watched my video on swing high and swing low, you realize that I'm talking about in this area. You will see it, that this was a swing high. If I take my Fibonacci from the low to the high, confluence number two, you can see that if you look at it here, there's a liquidity, an imbalance here. Either it is gone, this is a liquidity void, but this is an imbalance. And what do we have here? We have an order block, and you can see market reacted there. Are you with me? You can see market reacted there. This is signaling a valid order block for you. Now, if we have here again, there is a shift in market structure here. There's a shift in market structure here. This is just the 1 hour chart. I can go down to 15 minutes. I can go down to 5 minutes. I can go down to 1 minute. It still applies the same rule. Now, this is an order block. I haven't done the top down analysis on this yet, but Just to give you an example, what is again if I draw my Fibonacci from the high to the low? Premium discount. This is just for the bearish momentum. What again? We have what? An imbalance. And we can't really say. This will show you how it actually works. Are you with me? This is just for the bearish momentum, signaling a valid order block. Sometimes you wonder why markets will come to an area and to not react fully. These are the reasons why, because we are not picking the right order block. Now, if I come down to 4 hours, on the 4-hour zone, the same thing you apply. I would not trade this order block here. I would not trade it here, but there are other confluences and other rules I can take to trade all those zones. There are rules I can take to trade all those zones. But if you look at this section here, let me bring down this rule here. For a bullish momentum, you can look at it here. There was what? There was a swing of change of character here. That's a shift in market structure. And also what? A breaker block. If I take my Fibonacci from the high to the low, I can categorize this as another block. I don't know where market is heading to right now, so I'll just keep playing it to see where it's going to head to. Okay, and you can see what there was a reaction here, but I need to know why it reacted here, because on overall trend there was liquidity here. You can see that, right? What is not about liquidity, it's about order block. So order block consists of these rules and regulation. It must have a break of structure and there must be a shift in market structure. You can see the market reacted here. There was a valid order block, but like I said, you need to do a top-down analysis and know what you are doing with your buyers before you can mark a valid order block. And you can look at this chart very well. The whole market is what? A bearish momentum. So I'll be looking for more of what? More of a sell. I'll be looking for more of a sell. You can go down to as low as 15 minutes. You can go as low as 15 minutes and you can use the same method to get a good valid order block. Example here on 15 minutes. What happened here? There is a what? Another block here. There's another block here. Market has not come to react in yet. You just look for the rules. It has rules and regulation. There's a shift in market structure here. Market what? Market broke the swing high. If you watch my swing high and swing low video, you understand what I'm talking about. There was a shift in market structure here. There was what? There was a what? A fair value gap. If I draw my premium to my what? My discount, it fall under the discount area. This is just to give you a valid order block. It's just to indicate a valid order block. You can see here also a fair value gap. If I draw my Fibonacci from the low to the high in the discount area, confluence number 2, if I use my zone here, what happened here? There was a shift to mark a break of structure here, confluence number 3, and what happened here? Market reacted with this candle, the closest candle before the impulse move. Either if it's a bullish move, it will be the closest bearish candle before the impulse move, but it must have all these confluences in place. If it's for a bearish momentum, the same thing, the closest bullish candle after the impulse move, and those give you the high confluence they are looking for. So this is how to mark a valid order block. Please don't forget to subscribe to my channel. I hope this video was impactful and you gained some value. You can try it on one day, 4 hours. You can try it on 4 hours. You can try it on 1 hour, any of the time frame you want to try it on. But these are the rules to mark a valid and a strong order block. Don't forget to subscribe again, and thank you.